Okay. Can you see the screen?
Yes, I can.
All right. So our next chapter is control reconciliations. All right.
Yes.
So we have studied how we record transactions in the accounts, right? We
Yeah.
have studied about day books. We have studied about, double entries. We have studied about posting them into the ledger, right?
Yeah.
So we are going to take all that, okay, and create a general ledger. All right. So general ledger, on its essence or in its meaning itself, it conveys, right, generally used ledgers. Okay. So general ledgers are typically all the control accounts, or general ledgers are often said as a control account, right? So
Yeah.
why they are so? Because they are going to take every amount from every ledgers that you have prepared so far into one account. Understood? So that is a
Yeah.
general ledger account. Understood? No?
Yeah.
Okay. And what do? They actually summarize all the large number of transactions that you have taken over different ledgers. All right.
Yeah.
Now, this is from where does this originate? From the roots, right? That means the all the journal entries and all the daybooks that you have prepared before, right? So this is
Mm-hmm.
also a part of double entry system. Simple, clear?
Yeah.
Okay. Now we take control account so that we can prove, or we can look into the accuracy of all the accounting transactions that we have prepared so far. Understood? Okay.
Yeah.
And as in the business, as in the company, we mainly use it so that we can create receivable and payables balances into one account. Understood? And this is called as receivable ledger control account and payables ledger control account. Understood?
Yeah.
Now, receivables is, as you have studied before, comes under which category? Group 1 or group 2? Which category does it fall into?
2.
2, is it? Let me.
The the double entry group.
Group 1 is AEL, right?
Oh yeah.
Group 2 is what? Clip.
Yeah.
And
It's in.
receivables is what? An asset.
Yeah.
Clear?
Sorry. Yeah.
So it comes under group 1. So
Yeah.
anything that increases it is debited, right?
Yeah.
So same way we are going to debit receivable ledger control account, and ledger control is a summarized version of all the receivables that is due. Understood?
Yeah.
Okay. Now, when we are going to transfer it from the sales book, you're going to credit sales. You're going to debit the receivable ledger control account. Clear?
Yeah.
Okay. Now, payables comes under which category? Group 1 or group 2? Tell me.
2.
2, right? So when it
Yeah.
increases, as in we create a payables ledger control account, right? That is of group 2 in nature. So it increases. So we are going to credit it. Understood?
Yeah.
Like here. All right.
Yeah.
And where do we get this from? From the purchases that we have made. Understood?
Yeah. Yes.
Clear?
Yeah.
Now, this is what we do in order to create a general account ledger, right? General
Yeah.
ledger accounts. Okay. At the same time, every company or most of the big companies, what they do is they have a number of customers, right? They have a number of suppliers, right?
Mm-hmm.
Okay. So what they would do is they're going to take individual payables and individual receivables. For example, a company has a company, all right? A company has many customers. For example, E, C, and D, all right? And
Yeah.
each of them owes many, a large big or a large sum of amounts in different transactions to A. Understood?
Mm-hmm.
So what A would do is A is going to prepare individual accounts to E, to C, and to D. Understood?
Yeah.
Which would list down all the amounts that they should pay A in several occasions. Understood?
Yes.
Clear? So
Yeah.
that list is basically called as a memorandum.
Mm-hmm.
Understood?
Yeah.
Understood, no? So
Yeah.
same way you're going to create such an account or such a balance list for the payables as well from the supplier who should pay. Understood? From the supplier, of the supplier who you should pay. Understood?
Yeah.
Okay. And this
Yeah.
also is called as a memorandum. Understood?
Mm-hmm.
Okay.
Yeah.
And why do we need this? See, for every company, there would be a credit controller. All right. So, credit controller is basically the ones who's going to manage everything related with receivables and payables. Understood?
Yeah.
Okay. So, if he is going to manage such a big company, he should have the means to do it, right?
Mm-hmm.
Okay. And or in a company where there are a number of controls, or sorry, a number of receivables and payables, they should have someone managing them, right?
Yes.
So that someone is credit controller, all right? So he decides how many of the amounts should be paid this month, how many of them should be, received this month, okay? And what credit limits would the customers receive for their transactions, okay? And what credit limits should we avail from our suppliers, clear? So all
Yeah.
these decisions are made by the credit controller using the credit control system, understood?
Yeah.
Okay, and this is also useful for cash flow management in the business, understood? No?
Yeah.
Okay.
Yes.
Okay. Now, all these memorandum balances would have an account. All these individual memorandum would have many balances, right?
Yeah.
So what we would do is we are going to total each memorandum balances. Understood?
Mm-hmm.
Okay. For example, the previous, example, you have created, a memorandum of E, a memorandum of C, a memorandum of D, right? So this is
Yeah.
basically a list of amounts that E is due, and this is basically a list of amounts that C is due, right? Same way,
Yeah.
the list of amounts that D is due, right? So what are we
Yeah.
going to do? What are we going to do? We are going to sum up all the memorandum amounts. We are going to sum up all the memorandum amounts here, all right?
Yes.
And this particular amount would be traced back to the general ledger account that you have prepared. Understood?
Yeah.
Clear?
Mm-hmm.
And if we have prepared everything according to the rules and regulations, or if we have prepared everything accurately, incompleteness, okay, then
Yeah.
it should be identical. That means it should be the same, right?
Yeah.
And this process is called as control account reconciliation. Understood?
Yes.
Clear?
Yes.
Now, often students confuse memorandum balances with the ledger and payables ledger, but it is not so. Memorandum is a different list of, individual customer balances. Understood?
Yeah.
Okay. Now, this is a pro forma or an illustration of how the receivable ledger control accounts would show. Understood? So we
Yeah.
have a balance brought forward. It can be from the debit side or it can be from the credit side. If it is on the debit side, what does it mean? That we have to receive amounts from our customers, right? If it is on the
Yeah.
credit side, that means we have to pay them back. Understood?
Yes.
Now, you're going to take all the amounts that you have from the sales and post it into receivable ledger control account. Understood? Same
Yes.
way, you're going to take all the dishonored check and post it into ledger receivables account. Clear? Receivables control
Yeah.
account.
Yeah.
And you're going to take any refunds or credit balances that you have with the bank into receivable ledger account. Clear? Now,
Yes.
all the interest that is being charged or that you receive from the account bank balance that you have would be taken into receivable ledger control account. So see, everything that you want to receive or you have to receive, the total is taken and posted into receivable ledger control account. Understood?
Yeah. Yes.
To summarize, okay, same way, anything that goes out, okay, is credited from receivable ledger control account. Understood?
Yeah.
Okay, so that is sales return. You have sales return, okay, you have any bank payments that is being deducted, okay, and you have any irrecoverable debts that we studied earlier, right? So any irrecoverable debt would be taken, okay, clear?
Yes.
And
Yeah.
a contra entry would be taken that we will be looking towards later on, clear? And
Yeah.
then what you do is you're going to total everything down, okay?
Yeah. Yeah.
You're going to total everything down, and the same thing. You're going to total it and find the balance carried forward and bring it forward. Understood?
Yeah.
Okay. Same way, an illustration or a pro forma of payable ledger control account is where you're going to take everything on the credit side, right? Because it is group 2 category. Okay.
Yeah.
And here also, there can be a brought forward debit side, there can be a brought forward credit side. So, in ledger control account, which is of payables, what happens when there is a debit balance? That is, if the balance is on the debit side, what happens? That means our suppliers owe us money. Understood? That means
Yeah.
something has happened and we have to receive money back from our suppliers. Understood? No?
Yes.
Same way it is on the credit side, it is the general meaning. That means we have to pay our suppliers. Understood? No?
Yeah.
Now, what all do we take here? We are going to take all the purchases that we did. Okay. We're going to take any, bank refunds of debit balance. Okay. Clear?
Yeah.
Instead of credit balance, it would be debit balance. Okay.
Yeah.
Now, on the credit side, if there is anything that we have paid out, we are going to deduct it. And payables as a group 2 account, any deduction would come here. Understood?
Yeah.
Now there might be any purchase returns there, so we are going to take this, and purchase returns is going to be taken from purchase returns day book. Okay,
Yeah.
so previously you would have prepared cash book, previously you would have prepared purchase returns day book, right? So you're going to take the total from that particular day book and transfer it to payables ledger control account. In a nutshell, we can say that. Clear?
Yeah. Yes.
Okay. Now, there might be contra entries. That means two things happening at the same time. You're going to take that here. All right. Any discount received would be taken here. That means you have to deduct the payables ledger control account. So you're going to take it on the debit side. Understood? Now you're
Yeah.
going to total everything down and you're going to balance it. Clear? And that balance would be brought forward. Understood? No?
Yeah.
Okay. Now, these are just the abbreviations that has been used there. All right.
Yes.
Now, recording contra entries. So what are contra entries? To say it in a basic idea of contra entries is such that two things happening at the same time. Understood?
Yeah.
Okay. So that is contra. Clear?
Yeah.
Okay. So often it happens that our customer can also be our supplier. Understood? No?
Yeah.
Okay. So for example, A is there, Mr. A and Mr. B. Okay.
Yeah.
So Mr. B is a wholesaler and a retailer. Understood?
Yeah.
Okay.
Yeah.
And let's just say we are a manufacturing company. Okay.
Yeah.
And we take goods from Mr. B as raw materials. All right.
Yeah.
That means Mr. B gives us raw materials. Understood? Now, Mr. B is also a retailer, right? So often Mr. B gets finished goods from us. Clear?
Yeah.
Okay. So in
Yeah.
this case, Mr. B is our supplier as well as we are a customer to Mr. B, right? Clear?
Yes. Yeah.
Okay. So Mr. B sells us raw materials. At the same time, we sell him finished goods, right?
Yes.
So this arrangement can be, utilized better. That means we are going to net off receivables and payables against each other. Understood?
Yeah.
Okay. And this method is called, or in this method, we are going to take contra entries. That means in the payable ledger control account, there would be receivable ledger control account. At the same time, in the receivable ledger control account, there would be receivable ledger, in the payables, sorry. In the receivables ledger control account, there would be payables ledger control account. Understood? And
Yeah.
in the payables ledger control account, there would be receivables ledger control account. Confusing?
A little bit.
Okay. See, simple. The thing is, let's just say, This is payables ledger control account, right? So you
Yeah.
owe to Mr. B, let's just say, okay, and this is you owe to Mr. A.
Yeah.
Clear?
Yes.
So, so see, you both owe to each other, right?
Yes.
Okay, and it would be a contra entry. And why is it a contra entry? You owe to each other at the same time. Understood?
Yeah.
And
So
you
you.
owe to the same person. Clear?
Yeah. Okay.
Okay, so instead of giving them money and getting money, what we would do is we would net off the account. Clear?
Okay. Yeah.
Okay, so if you're going to record our, if you're going to pay them, okay,
Yeah.
in this case, it is the other way around. That means Mr. B is the main, B is our company, and Mr. A is the other one. Clear?
Yeah.
Okay, so Mr. B can give their, can net off against the receivable ledger, right?
Yes.
Okay, so that means now the receivable is going to be less. Understood?
Yeah.
So if the receivable is going to be less, you're going to credit it. Clear?
Okay. Yeah.
And the payables is going to be deducted. Okay, I'll just interchange the example, right? So Mr. A, Mr. B. Okay, so Mr. A is our customer. All right,
Yes.
customer. Okay, that means Mr. A gets finished goods from us. Clear?
Yes.
Same way, Mr. B is also our supplier because we get some raw materials from, not raw materials, let's just say we get our repairs done from Mr. B. Understood?
Yeah.
Okay. Suppose this is a, you know, service company. Clear?
Yeah.
Automotive service company. Okay. And we get our repairs done from Mr. B. Okay. And Mr. B
Yeah.
also purchases goods from our company. Understood?
Yeah.
Okay, so instead of paying Mr. B, or instead of receiving Mr. B the money, or instead of paying Mr. B for the repairs, what we would do is we're going to net
Would
off
have.
these two things together. Clear?
Yeah.
Okay, so
Yeah.
instead of paying for the repairs, we are going to deduct it from our receivables. So that is here. Clear?
Yes.
Okay, so if we are
Yeah.
going to pay using the receivables, our payables will also automatically get less, right? Or get
Yeah.
lower. So we are going to
Yeah.
debit it. Clear? The logic is clear.
Yes.
Now I want you to write things down. Take a screenshot. So, test your understanding one.
Yeah.
So Jonas Company prepares monthly receivables and payables ledger control accounts. At 1st November 2005, the following balances have existed in the entity's record. So we have a receivable ledger control account. We have a payables ledger control account, right?
Yes.
Okay. Now they have given us some information and they have given us credit sales, cash sales, credit purchase, cash purchase, right? Credit
Yeah.
sales return. See, as far as cash is concerned, we are not going to take cash sales into ledger control accounts. Understood? We are not going to take the cash purchases into ledger control accounts. Understood?
Yeah.
Because ledger controls are basically what? Receivables and payables. That doesn't involve cash. Understood the
Okay.
basic idea?
Yeah.
Okay.
Yeah.
I'll do this for you and then try doing it on your own. All right.
Yeah.
You can see the screen, right?
Yes.
Okay. First, we are going to take the receivables ledger control accounts.
Yeah.
Okay.
Yes.
We have the amount column. Don't do it yet. I'll tell you when you have to do. All right. So we
Yeah.
have both the balances, right? We have got debit balance. We have got credit balance. Clear?
Yes.
So it would be balance brought forward, balance brought forward here. Clear?
Yeah.
Okay.
Yeah.
And then 54,000 and 1,000.
Yeah.
Okay. We are going to take credit sales. So credit, what does credit sales do to our receivables? It would increase it, right? So on the
Yes.
debit side. Understood?
Yeah.
The logic is simple. Okay. So this is
Mm-hmm.
being taken. Credit purchase is to be taken on the other ledger control account. Credit sales return. Sales return would be taken where? What does sales return do? It would decrease our amount, decrease our receivables, right? So on the
Yes.
credit side. So anything that increases is on the debit side. Anything that decreases the account is on the credit side. Understood?
Yeah.
How much is the amount?
11,000.
11,000.
11,000.
Just put a tick mark on whatever is being taken. All right.
Yeah.
Amount received from credit customers. See, when we receive amount, what does it make our receivables? Our receivables would get reduced, right?
Yeah.
So bank, clear?
Mm-hmm.
And how much
Yeah.
did we receive? 242,000.
Yeah.
Clear?
Yes.
Okay. Now dishonored checks. I've got 500, right? So that
Yes.
means we have to receive 500 again because the check was dishonored. Understood?
Yes.
I haven't taken the credit sales amount as, sorry, credit sales amount is 34,000, right?
Mm-hmm.
Now we have dishonored check. Okay. Dishonored check is how much? 500.
Yeah.
Now we have amounts paid to credit suppliers. Cash discount received. No, it is related with purchases. Irrecoverable debts written off. So that is a thing, right? It would
Yeah.
deduct our receivables. Understood?
Yeah.
So irrecoverable debts.
Yeah.
4,000. Clear?
Yeah.
Next one. Increase in allowance for receivables. It shouldn't be taken. All right.
Yeah.
Okay. So it is after all these being adjusted that we have got that irrecoverable debt written off, right? And allowance
Yeah.
for receivables, as we know, we don't directly take into the receivables ledger account. Understood?
Yeah. Yeah.
Interest charged to customers. Yeah. So what is an interest charge to customers? Suppose we have given our customer a deadline, maybe 10 days. Okay.
Yeah.
So we are going to say them, okay, if you don't pay within that 10 days, then you would have to pay an interest with it along with the money that you owe. Clear? So that is
Mm-hmm.
basically interest charged. And that is also a receivable. Understood?
Yeah.
Interest charged. And it would be how much? 1,400. Clear?
Yeah.
Now, you have got contra settlements. So, as I've told before, contra settlements are where you're going to net off a trade payables and trade receivable transaction. So, in trade receivables account, a contra entry would be taken on the credit side. Understood?
Yeah.
So, contra is here. Contra settlements. How much is it? 800. Understood? No?
800.
Clear?
Yes.
Okay. Now, you're going to total them. Okay. And you're going to find the balances. Clear?
Yep.
Okay. Same way, you're going to prepare. I'm not uh, finding that balance. You have to compute it yourself. Okay.
Okay.
But I'm going to start. I'm going to start now with the other account. All right. That
Yes.
is purchase ledger account.
Yeah.
Okay.
Yep.
Let's. So what do we have? We can take credit purchases, right? 77,000.
Yep.
So credit purchases 77,000. Understood?
Yep.
Sorry. Where do we take? This comes under group 2 category. So whatever increases, where do we take it?
Yeah.
Where do we take it? Sudha? Whatever increases, what happens to it under group 2?
It debit, no credit.
Credit, credit. Be thorough
Yeah.
with the rule, Sidra. Don't be
Yeah.
confused. Be thorough with the rule.
Okay.
So here we haven't taken the balances, right? So we have brought forward and carried forward. Sorry, brought forward from debit side and credit side, right?
Yeah.
So, so balance dot forward. Balance dot forward. Okay, since we are taking all the, we are taking a totaled up amount, right? So there would always be some brought forward and a brought forward debit and brought forward credit. Understood?
Yeah.
243,000. Okay. Now we
Yeah.
need the credit purchases. 77,000 as I remember it. All right. Now we are going to
Yeah.
go back. So credit purchase has been taken. Cash purchase is not needed. Credit purchase returns. What happens when you return your purchases? You need to owe less, right?
Yeah.
So when you're going to owe less, what happens to your payables? The payables decreases. So if the
Yeah.
payable decreases, what do we do? You're going to debit it.
Debit.
Clear?
Yeah. Yeah.
How much is it? 3,000.
3,000.
Now what is our dishonor check is already taken. Amount paid to credit suppliers. So if you pay
Mm-hmm.
your credit suppliers an amount, what happens to your payables? Payables would decrease, right?
Yeah.
Clear?
Yes.
So bank. How much is it? 74,000. Clear?
Yes.
Now, discount received. So when you were going to pay, you actually received a discount of 2,000, right?
Yeah.
So your trade payables would reduce by that much. Understood?
Yeah.
Okay. So the discount received 2,000. Clear now?
Yeah.
Now, this is already taken. This is not taken. This is taken, and we have the contra. So contra, rule of thumb, if it is for the trade payables, you're going to debit it. Clear?
Yeah.
Because it is a netted off amount. So 800 here would be 800 here. Understood? Now you're going
Yeah.
to take, you're going to do the general thing, or what you actually do, what you usually do. You're going to total them down and you're going to find the balance carried forward. Understood?
Yeah. Okay.
Clear now?
Yes.
No doubts.
No.
Okay. Try doing etc.
Okay.
There is more to it, all right? I
Okay.
haven't, there is more to it. I haven't actually seen the last part. Okay. So see, here
I
they
can't
have
see
given,
your screen.
sorry. So here they have given you the 30th November 2005 balance, right?
Yeah.
Okay. So your balance carried forward is already calculated on the credit side. Understood?
Yeah. Yeah.
So that means on the credit side, your balance carried forward would be how much?
2000.
2000. Clear?
Yes.
Know what I am implying? Sorry. This one is on the credit side. Okay. So the balance carried forward on the receivables ledger balances.
Yes.
Okay. So if they're going to say the balances on the credit side, when you're posting, it comes on the debit side. Understood? What I'm
Yeah.
implying? See, they have given you the receivable ledger balance, right?
Yes.
So what is the balance on the receivable ledger? Okay. So on the credit side, it is 2000. Understood?
Yes.
So that 2000 would come the opposite side of the ledger account because we are not taking it brought forward. Understood?
Yeah.
So in order
Okay.
to make it carry forward, take it on the opposite side. Know what I'm saying?
No.
See, if we say like this, it's 2000 here. Okay.
Mm-hmm.
We take balance brought forward as the balance, right? So in order
Yes.
to make it the brought forward balance of credit balance, you need to take it in the opposite side. Understood?
Yeah. Okay.
This is brought forward balance. Understood?
Oh yeah.
Okay. So in order to make it into carried forward balance, what do? You take the opposite side. That's all. Simple.
Yes. Oh, yeah. Got it.
Clear? Simple.
Yes.
And you
Yeah.
need to calculate this one then. Understood?
Mm-hmm. Yeah.
Same way, this is also a brought forward balance. So in order to make it carried forward, you have to take the opposite side.
Yeah.
So credit debit side balance of 200 is given. You're going to take it on the credit
Credit.
side in order to make it carried forward. That is 200. Yeah. Okay. Clear? Now you're going to find this one. That is balance carried forward on this side. Understood now?
Yes.
Okay. And also I wanted to make it, I'll just take this again. Okay. I feel like I have confused you. All right. So
Okay.
recording credit balances. So often what happens is that, okay, when we have already recorded our customer's amount that is due to us, okay, it happens
Mhm.
that due to some situations we are going to have to give them out, right? So that means we have to pay them, not the other way around. Clear? And that
Yes.
happens because the customer has overpaid, okay, or the customer we have issued credit notes for the returns that on the fully paid orders. Clear? Or
Yeah.
we have received some payments in advance, right? So in this case there would be a difference. That means usually we are required to receive from the customers, but we have to pay now, right?
Mhm.
Okay, and due to this our receivables is going to have a credit balance. Understood?
Yes.
I'm emphasizing on the credit balance thing. All right, so it is a
Okay.
credit balance here, right? But it
Yeah.
shouldn't be so. Understood?
Yeah.
Okay, so what we would do is we are going to adjust it. Clear?
Okay. Yeah.
And in order to adjust it, what do you need? You have to increase your receivables account, right?
Yeah.
Clear? So you are going to increase your receivables account and make it on the debit side. Understood?
Yes.
Clear? And
Mm.
same way there would be something similar to this on the payable side, right?
Yeah.
And in order to increase the payables, that is in order to adjust the payables which has a debit balance, we have to credit the payables account in order to credit it. Understood? So it should be, this would be the double entry for both. Clear?
Okay.
Understood? No?
Yes.
Okay, Sutra, continue doing.
Okay. Thank you.